So would you like to know what the best strategy is for trading Forex news? The one strategy that's going to make you the most amount of pips in the long term. Because here it is. The best strategy, by far, is to stop trading the news and never do it again. So you're still here. Good. We have a lot to talk about. I hate the fact that news events even exist in Forex. I don't want anything standing in my way because I'm a 100% technical trader. But unfortunately, it does exist. And being able to navigate around it is an absolute art form, and we are going over that today because if you can manage to do this, if you can have a nice little method in place for avoiding news when it comes, and you have actually put a really good system together, there's going to be very little stopping you. But if you allow news to get in your way, then that's a different story. So in this video, we're going to talk about why it's best to avoid news whenever possible. Some of you finding this channel for the first time are going to be really surprised that I said what I just said. You were looking for a way to trade the news. That's what you wanted, and here comes this guy out of nowhere saying that you should just completely do the opposite. Allow me to explain. Also, there's going to be two major types of news, overall arching types of news that we should be aware of. We'll talk about that. We'll talk about the actual events that you need to concern yourself with as far as people who follow the No Nonsense Forex way of trading. And then we're going to put an actual plan in place, something that you can always have and implement anytime a news event comes up on the currency that you're currently trading. Not having a plan in place sucks. Actually, having something right there that you can always refer to, a little something that you wrote down, really, really helps a lot. And I am going to give you that today. So there are really two main types of news. I touched on this in the Forex Fundamentals video. News that applies to us, and then news that just flat out does not. We are, most of you watching this, are Forex traders. We are not Forex investors. So pretty much everything you see on places like Bloomberg, for example, don't really apply to us. I don't know how Bloomberg is in your part of the world, but in America, they don't even really touch on Forex a whole lot. And when they do, it's not even really that useful to me, but it would only be useful to people who are putting their money into the currencies market for the long term. So when I say Forex news, this is certainly one type of it, but it's not anything that really concerns us. So you can completely eliminate it altogether. I don't even recommend that people watch CNBC or Bloomberg or any of those networks. There's one thing Bloomberg does that, they always give us hot Asian girls to look at, which we do appreciate. Bloomberg, thank you for that. But as far as making money, it really is something that we should take out of our daily routine if it is part of your daily routine, because this stuff just really doesn't apply to us. The type of news events that do apply to us are the scheduled news events. So they're also known as economic indicators. And these come out every month, every 2 months, every quarter, whatever the case is. And we always get advance notice, which is really nice. There are freak news events that come out of nowhere. Those are very, very few and far between. What's really great about our game is if there is news coming out that is going to affect our market probably in one way, we get to know ahead of time when it's coming. And there are news calendars out there. If you don't have a news calendar, I'm going to link below the two that I like and that I use. I have one, and then I have a backup. In case the first one goes down or the first one doesn't quite have the type of news that I'm looking to avoid. The second one does come into play. I will link both those down below. But it's really nice that they exist. And I will always consult my calendar before I even begin opening up my charts, just to see if there's any pitfalls that I need to be careful of before I start entering a trade. Because even if the result of some of these economic indicators and some of these news events really isn't that important, it doesn't matter. It's all dependent on the people's reaction to the news. And people overreact like you wouldn't believe. And when they overreact, the banks overreact, and then you have this whole mess that I really don't want to get caught up in. Again, it's just something it's really best to avoid every time you get a chance to. But there are some people out there that want to get really sneaky and think, okay, I can make a bunch of pips in a very short amount of time if I just stay on top of one of these news events, and as soon as the news comes out, if it's strong, I'll go long that currency. If it's weak, I'll go short that currency. And just by being quick, I can get a bunch of pips really easily. And this works sometimes, which is the worst thing that can happen to you. Because I don't care how much success you have had doing this in the past. Long term, it is a terrible proposition because you are playing an unwinnable game against an unbeatable opponent. And who is that? Traders, all together now. Big banks. They decide where price goes. You don't. And if you want to sit there and fight them and play their game, they are always going to win long term. Why is this? Well, it's because they pretty much have permission to do whatever they want. You've seen it in the news that some of these banks have gotten fines for manipulating currencies. Well, as much money as these banks make, you could not possibly fine them enough for them to change anything that they're doing. It pretty much amounts to a parking ticket every time these banks get fined. And so they don't care. They're just going to keep doing whatever they want over and over. And it's great. When they do, even if they do something that makes no sense, the media is always right there to explain it away. Let's say some really positive news came out for the pound. But right when it happened, the pound dollar went short and just kept going short. What gives? Anybody that's been doing this for a while has seen things like this happen, and you can never quite understand why. But if you turn it on any kind of Forex news media, whether it's Twitter or Bloomberg or anything like that, the media will always be right there to say something like, oh, well, the news was already priced in, or some kind of nonsense like that. It's like, well, why didn't you say that before? Why are you saying it after the fact and talking to me like I'm stupid and I should have known that? Every time price makes a move that doesn't make a lot of sense, the media is always right there to tell you why after the fact. It is a great luxury the big banks will always have. Now, there will be times, plenty of times, where price actually goes where it's supposed to go. Really good news comes out on the pound needs to get a little more expensive now. Great, it's going to. All right? News might dictate a higher or lower price when it's all said and done, and price will get there eventually. But the banks decide when it gets there, and they get to decide how they want to move price up and down until it gets there. And if you've watched that Big Banks video, I will link that down below as well. That is my #1 video on this channel. You will understand how they do this. They have permissions and they have tools at their disposal that nobody else has, and we will never be able to have access to them. They can see all the orders that are currently there from retail traders. Everybody that's put in a long order or a short order, they can see it. They can see where that retail money is actually going. What is the trend? Are the retail traders as a whole moving long, or are they moving short? They can also see the stop losses. And again, nobody is there to check them. They have complete domain to move price in ways that trip orders, stop losses, and move the market wherever they want. And they make money when they move it against the majority. So after a big news event comes out, they know where price needs to end up. But like some macabre video game, they can just sit there and knock out everybody's orders, trigger everybody's stop losses until they see fit. And then once they're done, then they can move price to where it needs to be. It's a great, great luxury they have. And if you are somebody who likes to try to trade and make money while the big banks are busy doing this, you might get lucky every once in a while. But just understand, you are playing their game. Don't ever become surprised when something doesn't go your way. Because when you play this trading news game, things are not supposed to go your way. Especially not long term. So the overarching lesson here is this. Just don't take part in this. I know a lot of you want to. I know a lot of you found this video because you're trying to find little special tricks and tips and strategies when it came to actually doing this. But the best move if I can somehow get you to completely reverse course here, is to not take part in this. It is not a game you are designed to win. I like playing games that are actually designed for me to win. And over time, a lot of us have done this in the Forex market because what we do is we avoid things that we can't control. You can't control what the big banks do with these news events. You cannot control how the masses are going to react to them. All of these things are completely out of your hands, so why would you risk your own money while these things are happening? You are willfully giving up your own control of your own money, all for that instant gratification rush. And if you do that, you're going to get what you deserve. The best route to take is to learn how to avoid news properly. And that is what we are going to do here. It's really not that hard. You just have to have a blueprint in place. And once you have that, especially over time, it's going to be a little tough at first. You're going to have to refer to that blueprint a few times. But once you get the hang of this, it's like riding a bike. It's going to be so easy that you don't even realize you're doing it. Unless you are this guy. You are the guy with a bunch of screens who trades the 5-minute chart on a bunch of currency pairs and really tries to get in and out of the market super fast. Again, if we've learned anything so far, this is the wrong way to go. We here at No Nonsense Forex trade the daily chart. We don't have to be this guy. We only use one screen, and it's great because especially when it comes to news, yet another advantage we have by trading that daily chart is we can ignore most news events that are out there. A lot of you guys already have news calendars. You guys know how much news happens in the span of a day. Wouldn't it be great just to not have to worry about any of it? Because if you're trading the 5-minute chart, you have to concern yourself with almost all of it if it pertains to the currency you're trading. Trading the 5-minute chart is nerve-wracking enough, and now you're going to add that into the mix? All of these news events that you have no control over the course of the day? That's crazy. As daily chart traders, we don't hand over our time and our control to the market. We keep those things. And as a result, we have a ton of advantages that traders on smaller time frames just don't have. One of which is we can ignore most news events. And even if those bigger news events go against us, if we are trading in the right direction, if our technicals are correct, more often than not, we can actually absorb those news events and take some drawdown, but over time, price is eventually going to correct itself and come back our way. This is awesome. If a pretty sizable news event goes against most traders that are trading smaller time frames, they're completely wiped out. For us, it might wipe us out, but a lot of times it's not going to, and if we just wait it out, it'll eventually start coming back our way. Now, but that doesn't mean we're going to mindlessly stumble into these news events on purpose. We need a plan, so understand that we need to protect ourselves and our trades from these major news events every chance we can get. And like I said, there is an art to this, but the good news is that we almost always know when they're happening, and it usually just affects one, maybe two currencies. So even when these big news events come up, a lot of times they don't even affect us. But we still need to always be on alert when they do, because the biggest benefit really is it prevents us from a lot of losses that we really never needed to take in the first place. And as you guys have heard me say before, we win by not losing. And if we can prevent ourselves from taking these dumb trades to where we don't have any control over what's going on, over time our account goes up, because that's that many losses, that many stupid, pointless, didn't need to happen losses that never took place. You can take those minuses right off the spreadsheet. And our bottom line at the end of the year is much higher than it would have been. So this is important. Now, there are two main kinds of news events that we have to really be careful of, and we need to approach these in two different ways. And really quick, before I talk about those two, I always think this goes without saying, but a lot of people do it anyway. Do not trade during elections, such as the United States presidential election, the Brexit vote, things like that. You're absolutely crazy. This is the Super Bowl and the World Cup final for the big banks every time these things happen. They can move the market like crazy because the market is expected to move like crazy, but it gets to move on their terms, not yours. So if you trade during these times, you might get lucky every once in a while, and that's great, but just understand this is a recipe for absolute disaster, especially when things happen unexpectedly. Trump was not expected to win. The very first Brexit vote, Brexit was not the expected outcome. And the market went absolutely berserk, a lot of times going past people's stop losses. So if you want to play this game, you don't belong on this channel. I'll just tell you this now, because we take a very intelligent, regimented approach, and trading during elections is the exact opposite of that. You want to go enjoy your little roller coaster ride, you go do that. But you're not going to really learn anything else here. So moving on, you have news events that are long-term and sustained, like what's going on right now in the UK with Brexit. And if you guys remember Grexit from a few years ago, this affected the euro. Greece was way behind on its debts, and the European Union had to make a decision. Do we just get rid of them and not have the Greek economy benefit us over time, or do we keep them around and absorb all this debt? This was a very long process that had all these different news events pop up out of nowhere, and every time they did, the euro would move. And you never knew what these events were going to say, you never knew how the market was going to react, and you never knew which way the euro was going to go. The same is going on right now to a lesser degree in the UK. Things are really tumultuous right now. And as a result, a lot of weird things can happen with the British pound. During these times, even if it takes months, Grexit definitely got drawn out over months, it is best for you not to trade these currencies at all. That's really tough, but there are 8 major currencies out there. If one of them has to go by the wayside for a few months, you're going to be fine. It is in your best interest to continue to trade in a way that you can control and eliminate things you can't. And all these little pop-up news events that happen while things like Brexit and Grexit were happening is not in your control. Let these things play out. Have patience. And then once the dust had settled, then jump back in. I couldn't trade the Swissy for the longest time because it would correlate, point by point with the euro more days than it wouldn't. So I was only able to trade 7 currencies, but I lived. I was fine. I made my money. Now that the Swissy's back into play, that's great. That just gives me more pairs to trade. But I was just fine without it. And you're going to be fine too if you just don't trade the British pound for a while this whole thing blows over. These type of events do not happen very often. But when they do, it is in your best interest to play the avoidance game until it blows over. Now, on to the events that we are more familiar with, the short-term events. Always have a news calendar and check it before you look at your charts. This needs to be part of your daily routine. Most of the events, like we said, you can ignore, but that's fine. It's not about the ones you can ignore. Every event out there, no matter how big or small, can end up biting you and knocking your stop loss out, but there's a very small chance of that happening. If it happens, it happens. Again, we cannot control that. This is all about the news events that we can control. So what we're going to do is, this would be a great time to take notes if you haven't so far. We're going to go over all 8 major currencies, and I'm going to tell you which events out of all of them, if you are a daily chart trader, just by the pure numbers, it is best to avoid once you see them coming. And then after we do that, I'm going to show you exactly how to avoid them. So while you're getting your notes out, let me go ahead and explain how I came to these numbers. Now, a lot of them I've just known for a while, but I learned a few things while I did this. What I did is I went to a place called newsimpact.com, and I signed up for their little program, and it shows all the historical events going back 5, 6 years. And they show how big the actual spikes were. So right when the news event came out, on average, how big did price move right when that initial event came out? Because once you know that, you can really decide what's best to avoid, because once those spikes happen, spreads also get really wide too. And this is a situation you really, really want to avoid if it gets too high. It was a $20 a month type thing. You can go there too if you want. I don't really have a use to keep it. I got the information I wanted, but if you guys really like to nerd out on stuff like this, you can certainly go there. And I'm not going to talk about the actual numbers because I don't think that's really cool for me to pay for something like this and then just give out all the information to you guys. But feel free to go there. I will provide the link down below in the description. And the main benefit is I was really able to find the most impactful news events to really stay away from. And I just did it for 2018 because what you will find over time is things that really mattered and really had an impact back in, let's say, 2016 don't always have the same effect now. And conversely, things that didn't mean anything 2 years ago sometimes now have all of a sudden taken center stage. You just don't always know. But these changes happen very slowly, so I wouldn't concern yourself about that too much. I'm going to tell you right now, as of January 17th, 2019, what the events are that you should be careful of. And so what we will do now is go currency by currency. We will start with the United States dollar. Of course, non-farm payrolls, the biggest news event of the month every month. Is the number one thing you need to be careful of. If you are trading during non-farm payrolls, please stop. Interest rates, anything with the FOMC, is going to be something you will want to monitor. And this is going to be a recurring theme on just about every single currency. Because when interest rates go up, people want to move their money into those currencies more because they're getting a bigger return. And conversely, when they go down, they want to pull that money out and put it somewhere else. So that's a really big thing. So always pay attention to interest rates. When Jay Powell speaks, he is the Fed chair. Usually, I don't know, the last few we've had, I don't know if you guys remember Bernanke. Bernanke was a fireworks show sometimes when he would talk. And then we had Janet Yellen, who really didn't say anything. And Powell is a little more exciting than Yellen, but not much. But what the exciting part of it is he is starting to have odds with President Trump. So when he talks, it's a little more impactful than it would be otherwise. So it's just best to stay out of the way because it's not even a news event that just comes out and we can see the number and we can react to it. This is something that anybody can interpret any way at any point in time. And that's really dangerous. So when the Fed chair speaks, get out of the way. And then the CPI numbers is something that didn't always impact the United States dollar that much, but now it's starting to. I had suspected this, and then when I ran the numbers, it confirmed this. So United States CPI numbers are now going to be something you need to concern yourself with as well. But that is going to be it for the United States dollar. So moving on to the euro. Not much here. And we talked about this. I like trading the euro because since it's not one country, it's a bunch of countries. The news events get spread out really thin, and they don't affect the euro overall like they normally would. But what you do have to watch out for is interest rates, of course, and then anytime Draghi talks. Mario Draghi is the president of the European Central Bank. He usually doesn't say much that's too impactful, but every once in a while he will. You never see it coming, and then the euro goes bonkers. So just play it safe, and anytime you see him talking, get out of the way. Moving on to the pound. So a few things here. Not as much as I really thought. When you have a smaller country like this, economic indicators are typically more impactful, as we will see in another currency. But when I ran the numbers, not so much here. I was actually concerning myself with more news events than I should have. So I'm glad I did this. But you will have to wait, you're going to have to concern yourself with interest rates for sure. And this is kind of cloaked in something called the MPC vote. There are 9 chairmen, 9 officers that decide if it's time to move interest rates one way or another. And on your calendars, you will see this as a 0-0-9 typically, which means 9 people, all 9 people are saying, no, we're not going to do anything. But if that number ever shifts one way, like even a little bit, like it's a 0-1-8, for example, the pound can go crazy. And you never know what these people are thinking, so just watch out for that. GDP is something. I always remember GDP for the GBP. Their gross domestic product, because they are a smaller country, does impact them a lot more than it would for a larger country. So pay attention to that. And honestly, for the pound, that is really all I found. They do have other economic indicators, but they just didn't spike up enough to really concern ourselves being daily traders. Pretty nice. So we move on to the CAD. Now, the CAD had a lot more than I thought. I knew about a few of these, but one of these is something that I'm now going to pay attention to for a while. So you have to know about their interest rates, of course, just like anything else. The employment numbers do have an impact in Canada, and the good news about that is they often happen the same time non-farm payrolls do. So you can kind of kill two birds with one stone on that one and really give you another reason to completely sit out the market on non-farm payrolls day. Retail sales are a bigger deal here than they are elsewhere. Pay attention to that. And then CPI. This is the one I did not see coming, but CPI data for Canada has become more significant than it was before. And it's something else that you need to watch. On to the Aussie. Interest rates, as always. And then employment numbers here. They still have a pretty good impact on the country as a whole. What you no longer have to worry about, and this is great, is Chinese news. China is Australia's #1 trade partner, and as a result, a lot of times when things would happen in China, they would affect the Aussie dollar. Now, because the Chinese economy has subsided and is going to cool off a little bit, this is not nearly as big of a deal as it was because they're not in the building stage like they were before. So they're not taking all these minerals and materials from Australia like they were before. So that's great. I used to have to really be on top of some Chinese news if I was in the Aussie, but now not really. And that's really cool. So really just interest rate and unemployment here. On to the Kiwi. There is more here than you might expect. Employment numbers for sure. GDP for sure, because remember, this is a smaller country. You know, these things do matter. GDT, Global Dairy Trade, I think is what this is. Don't laugh. Dairy is a really big part of the Kiwi economy. And when these numbers come out, they do make a difference. Now, my main news calendar, that Forex factory calendar that you see me linked down below, doesn't always pick up on this really well. That's where my backup calendar comes in. I don't know why Forex Factory thought this wasn't a big deal. It actually is, and you really need to be on top of it if you're trading the Kiwi. And then the interest rate, but really nothing significant has happened since May of 2017. But that does not mean you shouldn't still be aware of it, because the longer time that passes, once something finally does happen, shit's really going to hit the fan. Even if the move was expected, it doesn't matter. And so then you have the two currencies that you can really sleep through almost every piece of news out there. The first one is the yen. Just worry about interest rates. They almost never change it, but like I said, when it does, it is going to be a thing, so just play it safe. It's one piece of news every month, if that, so just be on top of it. Super easy. And then on the Swissy, you want to do the same thing. It's called the Libor rate in Switzerland. And again, barely ever changes, but just be mindful of it, and it's best to sit out if you see it coming. So I'm about to tell you how to do all these things, but just remember, you can get stopped out by news events I didn't mention. But again, the chances are really low. These are the main ones you need to concern yourselves about, but just know that the banks can react to things however they want. We talked about the flash crash that just happened. Apple came out with some news saying that China's economy has slowed down, and we are making this move as a result, which is so minor. Most people in the game already knew that, but the market went absolutely haywire as a result on level 1 type of news. Again, they can do whatever they want at any time, and so sometimes these smaller events are going to bite you, but just play the odds and have a game plan in place for these larger news events. If they stop you out, they stop you out. You just kind of move on, and that's just the breaks. That's just Forex trading. But on to the things we can control. This is how you do it. If you really haven't taken notes up until now, this is going to be the point in time where you're going to want to. Depending on your situation, once these news events start to come up, there are different approaches you need to take. So let's now go over what they are. When it comes to entering a trade, if you are not in a particular currency pair, but news is coming up, here's what you do. Do not enter a trade if one of these news events that affects your currency that you're looking at is coming up within 24 hours. This is my general rule of thumb. I trade the daily chart, and I look, and I say, hey, can I get at least one candle's worth of trade in before this news event comes up? If I can, I'm going to go ahead and take it. if I can't. If within the next 24 hours, this big news event, one of the ones that we just talked about is coming up, I'm out. I'm just not going to trade it. The sun will come up tomorrow. I'll be okay. But what I am not going to do is allow one of these news events the chance to stop me out of my perfectly good technical trade. And so to prevent that, this is the rule that I follow. So now let's say you're already in a trade on a currency that has a big news event coming up. There are a couple different approaches here depending on where your trade is at. All right? So if you are in a losing trade, now it hasn't hit your stop loss, you're just losing a little bit, or you're down maybe 50 pips, something like that. And a news event, one of the big ones that we talked about, is approaching in the next 24 hours. This is what you need to do. You're not going to like this, but if you want to really play the odds and protect yourself, this is what you need to do. You need to get out of that trade. Close it up. Take the loss. There is no reason whatsoever to risk taking a bigger loss because a news event is happening. There is no reason to risk that spike shooting price past your stop loss to where it didn't get triggered. This doesn't happen often, but when it does, the impact it has on your overall account is massive. Do not sit there and cross your fingers and just hope that this news event makes price immediately come back your way. The risk of downside is too great. We have to take that downside and completely erase it, and we do that by closing out this losing trade. Take your lumps, move on, but do not risk making it worse. Now here is where things are going to get complex. So, let's say your trade is winning, but you haven't taken profit yet. Now for those of you who are brand new to the channel, we use the ATR indicator to determine where we are going to take profit. It's a really important video to watch. I'm going to link that below too. There's going to be a million links in the description down below. But let's say that the ATR on the euro dollar is 80 pips. You have entered the trade and you are about 30 pips up, but you haven't had the chance to really take any profit. Or scenario number 2. Let's say you have taken profit at 80 pips, but then price has gone down a bit, and now, for example, sits at around maybe 50 pips of profit. This is what you're going to need to do. So let's repeat those two scenarios. If your trade is winning, but you haven't got to that initial take profit, and for us, we take it at the ATR. Or if you have taken profit, but now the trade has come back a little bit, and the amount of pips you have is less than that ATR number. What you need to do is get out of the trade. Don't risk taking a loss now. There's no need for this. Take your win and smile and move on. Do not allow a news event that you cannot control all of a sudden take you into negative territory. There is going to be times where this news event went your way and it ended up being that propellant that you needed for that big trade, and I just talked you out of it, and you're going to be mad. But understand that the name of the game here is preventing losses, and this will do you a much bigger favor long term than it will if you just cross your fingers and hope it rides. I know you're going to say, well, I moved my stop loss to break even. I can't lose. Well, the chances of that stop loss getting taken out really do go up here. Because remember, when those spikes happen, spreads get wider as well. And some of these brokers, my broker included, think it's really cool to make spreads go really wide and take your stop loss out. It's just much better off, I have learned over time, to just take the entire trade off at profit. What I'm saying right now is some more advanced stuff. I hope a lot of you understand what I'm saying. If you don't, that's okay. There's a lot of videos to get you caught up. But if you can just write this down somewhere and abide by it, trust me, you're going to be better off long term than if you didn't. I can say this because I've tried every combination of this, and this is what has best worked for me. Now there's one scenario left, and that is if you are winning big. So if you've already scaled out, you've already taken that initial profit, and now that sucker is running. And so if the ATR on your trade was 80 pips, you took off at 80, and now you're sitting at like 200 pips. That trade's doing really well, and now this big news event is coming up. What you do here is just carry on like you normally would. You probably have your stop loss at break even, or you have a trailing stop in place. I know I have not done the trailing stop video yet. That is the one that a lot of people are requesting. There is a reason why it is not out yet. There is another video that needs to come out first, and I'm still working on ways to make this whole trailing stop thing a lot simpler, because the method I use right now is a little too complex for me to explain to a mass audience. But that video will come. You are intelligent. You probably don't have your trailing stop in a stupid place, all right? So carry on like you normally would. Have a trailing stop there to prevent price from really shooting down and erasing a lot of that really nice profit you've made. But apart from that, you really don't need to do anything different here. Again, best case scenario, because we're trading the daily chart and because we're dealing with more pips than most people do, maybe price will go against you and it will not hit your trailing stop, and it will eventually start correcting itself and start going your way even further. But you always need to protect yourself in situations like this, and that's where the trailing stop will come in. So this is the game plan you need to follow. So pretty heavy video. You guys made it through. So in conclusion, this is how we wrap it up. Just don't fight with the big banks. It's a stupid game to play. You're expected to lose, and over time you're going to. Recognize those long-term news cycles like Grexit and Brexit, and anytime a nation is in turmoil over something, and any little thing can pop up and ruin your trade. Situations like that, you just want to sit out and let that whole thing play. Know which events, as far as individual economic indicators, to avoid once they pop up. I've given you that information now. And when they do come up, have a plan in place. Pretty simple in the grand scheme of things. And once you guys get this down and get used to it, it will become very easy. But it absolutely needs to be a part of your trading. And when it comes to the effect it's going to have on your overall account, you're not going to see it right away. This is one of those things you're really going to notice at the end of this year compared to where your trading was last year. These things really do have an impact. But it's like anything else. Without a plan, without a structure in place, you're completely flying blind. Those of you who have followed this channel, one of the biggest differences in your trading is that you now have a structure that you didn't have before. And that was really the one thing that you needed all along. And so if you are down with things like that, this is the channel for you. We put structures in place that you have never had before. Structures and plans that debunk the old way of trading, because the old way of trading doesn't work for most people. These methods do. And many of my followers are testament to this. So whether or not you understood most of this video, if you like the way I explain things and you love the fact that I'm giving you structures that you can actually use and follow that completely take the guesswork out of trading, subscribe to this channel and hit the bell. Don't miss anything. And if you are new, go to the beginner's video. I'm going to put it up on the end screen. I'm going to link it down below as well. It will actually tell you exactly how to navigate this channel and how to navigate the blog I make so you can actually learn this quick and catch up to the rest of us right away. Because once you do, and again, my listeners will tell you, the change in your trading can be absolutely massive. Go get it.